Good morning, everyone, and welcome to this amazing conversation. It's my pleasure to introduce a smart, brilliant, energetic, amazing woman who's helped me in my journey with precious metals. I wanted to introduce you today to Lynette Zang, Chief Market Analyst for ITMTRADING in Arizona in the USA. Hello, Lynette.
Well, Tanya, thank you very much for that very wonderful introduction. I will do my best to live up to it.
Thank you, Lynette. I saw your previous show today, and I'm so blessed to be talking to you today, 26th of August, 2020 here in Melbourne, and there is lots happening. So you were very fired up with some very recent publications and things that you were walking through. We're right at the cusp of what is happening, this reset that you have been warning us about, telling us to care about for a very, very long time. So I'm blessed because I want to, we've got this moment. So Lynette, my crew, the people that are in my community that I want to share you with, are in a group called Own Your Own Economy, and a lot of them are actually new to the precious metals markets. They're probably more in the share space. I know that we haven't really prepped on questions. If we can just fly a bit intuitively, if you're good with that. I wanted to just quickly drop in and start with Warren Buffett, right? So here we have this person who, would bag gold in the media, was pro shares and so on. Very recently, like the last week or so, has pivoted. So maybe we start there on your thoughts on perhaps what he's done, why he's gone into there, and what he perhaps might have known that was coming and happening. You okay to talk about?
Well, he probably knew a lot more because his father, I think his father was a congressman, and he really was a big proponent of having the ability to convert paper currencies, fiat currencies, into gold. And if people are new to this, I usually like to start, if I may, with the basics so that people understand what money is. Because money is a tool to value labor. So when we were on a gold standard, well, it takes energy and labor to pull it out of the ground. So you're actually exchanging labor for labor, which is a fair exchange. But if a government wants to tax you on a gold standard, you know about it. Additionally, a gold standard requires fiscal responsibility. And for corporations, well, they actually want to pay their workers less, but if you're used to getting a certain amount, you're not going to be accepting a lower amount if you understand it. So they transitioned us into a fiat system, and fiat is by decree. And what they knew when they put this system together, thanks to John Maynard Keynes, this is Keynesian economics, is that number one, people marry the legal money of the state. And so in all of these transitions, they keep the name the same so people don't realize that anything has changed. So it was $1 before 1913. It was $1 afterwards. It was $1 after 1971 when they completely took us off the gold standard. And now they're bringing out the digital dollar in the US, but the same thing is true everywhere. They also knew that people do not understand inflation, because inflation causes nominal confusion. And in other words, if you had a $20 bill 10 years ago and you have a $20 bill today, nominally they're identical, they're both $20 bills. But what that $20 bill would buy you 10 years ago and what it will buy you today is vastly different. And so that was a way for corporations, like here in the US, in the early 70s, the average income was $9,500. And a family of four could live on that with one wage earner. Today, the average income is something like $53,000 or $56,000. So nominally, that's a lot more. And people will go, well, yeah, I'd much rather get $56,000 than $9,500. But in this country, it takes two wage earners earning the average wage, and they're still paycheck to paycheck, which is why when they just did the $1,200 stimulus checks, it was for anybody earning less than $75,000 a year. So Warren absolutely 100% knows all of this. And when he goes in to buy an asset, if he's buying a stock, it's because he has the ability to buy enough of the stock to basically take over the company or have a huge influence in the company. So, and, you know, they denigrate, you know, they call us gold bugs. Well, how about stock snakes? Because there's a whole lot more dishonesty that happens in the stock market and on Wall Street than in the physical gold market, which is a true supply and demand market. And, you know, I mean, I honestly, I used to have a level of respect for Warren years ago until I heard him in this, there was a film that came out, IOUSA, and they did like a town hall meeting where, you know, Warren and a number of other people were sitting up on the stage answering audience questions. And this woman stood up and she said, you know, I'm not as worried for myself as I am for my 20-year-old daughter here. And I'm worried about what's going to happen because of all of this debt. And his response was, oh, you don't need to worry about that. The pie will just keep getting bigger. But that's not true. There's a finite amount of assets in this world, and wealth never disappears. It just shifts location. And when he said that, frankly, that's when I really lost all respect for him. And when they come out and say, gold is an old relic, what does it do? Well, quite honestly, fiat money is used in one place, the fiat system. So it can be stocks or it can be bonds, you know, but there's still fiat. It's not it's not really diversified. Gold is actually used, and so is silver, used across the entire swatch of the global economy. So in manufacturing, in medicine, in food, in the financial system, in jewelry, etc. It's used right across. So actually, physical gold and silver has the broadest base of buyer. It doesn't pay a dividend because it doesn't have to pay a dividend. It is full utility. Fiat has to pay a dividend in order to really inspire people to want to own it because it has the most narrow base of buyer. So the fact that Warren has had this massive sea change means that what he knows, because he learned it on his daddy's knee, and what he knows is that the system is incredibly broken and the central banks are out of tools to keep the inflation rate. And that was the big experiment, was with the advent of the Federal Reserve, it was actually the first time that any central bank had an unlimited charter. In other words, they could be around forever. And the real experiment was through interest rates controlling the rate and speed of inflation. So if they want to stimulate the economy, they lower interest rates. That inspires people to borrow and spend. And if people notice, if prices are going up too quickly, they raise interest rates to inspire people to not borrow and spend, but to save. And with the world anchored around zero, they've been experimenting with negative rates, so going below zero. That's what the current system prevents them from going too far below zero because it's 1.00. So they have to get rid of the paper.
Yeah.
Pardon?
Digital. Yeah.
Digital. Then you can have as many digits after that point as you want and continue, but now robbing people of their principal. See, up to this point, they've been just robbing people of their purchasing power. And I shouldn't really say that because all of these corrections is a wealth transfer. But yeah, that's what Warren knows. Warren knows that the system is resetting. He 100% knows that.
Thank you, Lynette. Can you just, what's your definition of what's going on with the spot price? Because one of these questions that people, so I shared with you off camera, I've been in precious metals since around 2011, had done my own research, got to a certain point, started kind of dabbling, got very, very serious. And then with tuning into people like yourself in the last 24 months or so, really saw what was coming and was, you know, gearing up for that. And then just in sharing with our community, told them a little bit about it. And some people can't get their head around that it's not necessarily about the spot price. It's about, so would you mind giving your explanation of what the spot price really is and why it's important to not buy gold based on the spot price, even though it's a factor?
Right. Well, what the spot price is a contract. And they actually created it in the 70s. And when you read the documentation, when they create things, they actually say in there, and then subsequently, that they created it because they knew initially there was going to be a big, huge rush to gold, but they didn't want people to hold gold. And so the spot price is about, initially anyway, giving the central bankers and Wall Street a tool to manage your perception of gold, okay? And since it is a contract, it has subsequently become it's a trading mechanism. And it does not reflect the true fundamental value of an ounce of gold, because again, remember, it's used across the entire swatch of the economy. And so you've got the demand high. And when you are in a physical market, that's when you have a true supply and demand balance. But when it's just contracts, it's a way to leverage how much physical gold there really is. And the Bank for International Settlements, which is a central banker's central bank, before they changed their accounting rules and before, unfortunately, I knew about print screen, I can tell you with my own eyes, I saw that for every 1 ounce of physical gold that has been pulled out of the ground, there were 62,000 ounces of paper gold. 62,000 to 1. That's huge leverage. So right now, when you're asking me, so that's the first thing, is you have to understand that it's a contract and it's a trading tool. And as long as they can get people to buy into this is what gold's worth, but if you've been buying gold, you know the premium on it has gone up from the contract to what you actually have to pay for it, because demand has escalated so much. So there are a few things that are happening right now in this market. Number one, an accumulation tool. You know, I have a policy that you should always do what the smartest guys in the room are doing for themselves.
Right.
Okay.
Right.
And who knows more about money than central banks? So we know that central banks have been accumulating gold as fast as they can since the crisis hit in 2008, which is actually when the system died. Okay, the system died then. It's just been on life support with all of this funny money being created. So what actually happened was when the price back in 2011 or 12, when the price threatened to breach to go above 2,000 an ounce, well, that wasn't a technical number, but that was a psychological number, because a rising gold price is an indication of a failing fiat currency. And so they suppressed the price by just allowing a whole lot more of those contracts and those leverages to come out. But in 2016, that's when spot gold bottomed. So it's interesting because since you can create an unlimited amount of contracts, and there is only a limited amount of anything physical, It's interesting to me that spot is still not around, you know, 800 or 1200, 1100 an ounce, but it started from there powering higher. So when you're looking at a graph or a chart, what you want to look at is the highs and the lows. And when you see a series of higher and higher lows, then you know that's a positive chart, as a positive trend. Because if you keep getting higher and higher lows, you're going to get higher and higher highs. And converse, if you want to know if it's a negative trend, like in the currency, when you see a series of lower and lower highs, you know it's a negative trend, because if you keep getting lower and lower highs, you will get lower and lower lows. Just makes sense. So, right. So spot actually bottomed in 2016. And so now you have the peak over here near 2000. Okay. And then it went and it bottomed and it created what is called a cup formation, which is a very powerful accumulation pattern. And it tells you that the smart money, especially down here at the bottom, is buying gold, this is true for any asset, but as buying because they know that it is severely undervalued. So what's happened recently, and although this happened, it happened sooner, I think, in Australia and most other countries later in the US, that cup formation concluded. And when you conclude that, what happened was the price went above the high that was made back here in 2011, 12, whatever that was. And that was like 1930 or something like that. When that happens, so that would be called a resistance level. When that happened, it always works like you have your hand on a spring. And when you remove your hand, the price shoots in a direction. If it's a resistance level on top, like it was with gold, then boom, it shoots up, which is what we experienced. But when that happens, understanding that this is a trading market, and there are lots of things that's happening in the gold market right now, but understanding that that is a trading market, what you're seeing right now in this little teeny pullback that we've had is simply profit taking. That's what that is. It's an advantage, and and you just need to be accumulating gold and silver. But also what's been happening is, and this is really a big, huge key, those contracts, in theory, you can convert those contracts and take physical delivery of the underlying gold. Typically, since it is a trader, somebody that's just in and out and just rolls them over and makes fiat for them, well, they don't typically take delivery. They just keep rolling the contracts over. But they too, like Warren, are standing for delivery. But there's so much leverage in the different bullion houses and exchanges, like the COMEX and the London Bullion Market, etc., that this is potentially going to create a huge problem for them, because they don't have the gold to deliver out if enough of those traders stand for delivery. So stay tuned, because that's fireworks, and that is about to happen. And that's why, that's the thing. We've been trained over time. These things happen slowly so that we believe the lie. Here's one of my favorite quotes, and I might not be exactly accurate on it, but when a well-packaged web of lies has been sold gradually to the masses over time, the truth speaker will seem insane. But you have to do your own due diligence.
Yeah.
Right? And that's what you discovered when you were looking too.
Absolutely.
So,
yeah, absolutely. Amazing. Thank you. So now I'd like to talk a little bit about, if I can, you talk about the difference between collectibles and bullion, or those, bullion. And is it numismatics? Do you mind just a quick kind of distinction and, yeah, however you want to explain it?
Okie dokie. Well, you know, a lot of people will negate this, but I personally believe that history has a tendency to repeat itself. And one of the things that always typically happens, desperate governments do desperate things. And they know that gold is a store of wealth. And it's a way to hold a lot of wealth in a small movable package. So history tells us, even recent history, I'm not going back, you know, don't have to go back that far, really. It just happened in India in 2016 when they demonetized their currency. But governments have a tendency to confiscate their citizens' wealth through inflation and also through over confiscation. And in this country, in the US, it's happened 3 times. Now, I was very lucky. There's no doubt in my mind, but that I was groomed for this moment in time. And my Uncle Al, who was my favorite uncle, he was a high-end antique dealer. And I was at his house one day, and this was in 1965. My parents were there. And he said to them, if anything should happen to me, Aunt Bertie will be well taken care of because of what's in these safes. So I was 10 at the time. I'm almost 66. And I turned around to look what he was talking about. And those safes were packed with gold coins. Now, in 1965 in the US, it was illegal to hold more than 5 ounces of gold unless you held it the way my uncle did, which were all pre-1933 gold coins. Because the wealthy have a tendency, since they are typically the ones that write the laws and the rules, they have a tendency to write them in their own benefit. I didn't really understand that at 10 years old, but it really stuck with me because I would guess, now understanding what the size of a monster box, so 500 ounces looks like, I would guess he had at least 1,500 ounces of gold in each safe. So at least 3,000 ounces of gold, when that was the only legal way that you could hold it and therefore actually use it in the normal marketplace. Mm-hmm. But bullion is new gold. It's newly minted. And that is also monetary gold. It's considered monetary gold. So for me, and the premiums really on the collectible coins, they're a little bit higher now, but they're virtually, historically, they're almost non-existent. So I believe, you know, that if somebody can pay $8 million for 1 ounce of gold, I'm thinking they either write the laws or they would have the ability to influence those that write the laws. So even though I'm not going to spend $8 million on 1 ounce of gold, I want to be in that category because I believe that governments can do anything they want. I'm not saying that they can't confiscate the collectible coins, but what I am saying is it would be much harder to do. With bullion, since they control the spot market, you know, let's say they decide to confiscate when spots at 3,000 an ounce. They could say, well, turn in your gold and we'll pay you $6,000 an ounce. And most people, not understanding that that doesn't reflect its true value, okay, they would volunteer their gold. They always want you to volunteer because then you have nobody to blame but yourself. But according to my analysis, which is really, really super simple, I'll never get you to the penny, but I'll get you pretty close because we don't know what the coverage ratio is, and I'll come back to that in a second. But according to my analysis, the true fundamental value of 1 ounce of physical gold is somewhere north of $12,000 right now. So you're thinking you're getting a deal because look at this, they're paying. And I've heard people tell me, well, look, in 33, they paid the people for the gold. Yeah, and as soon as they got it, they reset the currency, and the population lost a massive amount of purchasing power into a depression. And that's the way it always happens. You can look at the reset in Venezuela. You can look at the reset in Russia. You can look at, I mean, there's been 4,800 resets, and they all look the same. There's a tremendous amount of chaos around this, right? So you're distracted. You're looking at what's happening with the coronavirus and the lockdowns. You're looking at the, you know, what's happening with Black Lives Matter. So what's happening with civil rights. You're looking at the women's movement, you know, the Me Too movement. All of that kind of thing was happening back in the 70s as well. And so, you know, and the politics, you're looking at the politics, right? So you're looking over here while they're changing everything over here. They're changing the financial system over here. And this is global. Nobody is immune from it. And no, they can't stop it. I get that question all the time. Can't they stop it? Can't they just do this for, no. Look at the insanity out there. They're losing control.
Wow. Okay. So you also talk about silver a lot in terms of, you know, barterability, things like that. So I know you guys do a strategy. So at the end of this, we can let people know how they can, you know, get in contact with you for your strategy. Do you want to just talk a little bit about silver? And I know people play the silver gold ratio, but for you, I think it's more you look at it just in terms of having it as an asset, or do you use it for trading and bartering? What's your thinking around silver?
Yeah, I look at everything as a tool, and it's the right tool for the job. So it's the functionality of silver. And, you know, the strategy is based upon sustaining your current standard of living and then expanding your wealth base. So in order to be able to sustain your standard of living, what do you need? You need food, water, energy security, barterability, wealth preservation, community, and shelter. And it doesn't matter what's happening in the economy, that's what we all need to be comfortable and have a reasonable standard of living. But what happens is that when we go into the hyperinflationary event, which means that, and by the way, the only difference between inflation and hyperinflation is the speed of that inflation. So when it happens that quickly, people lose confidence. And we can see the public is losing confidence in the what they want to say is a traditional institution. It's not. Gold and silver are, because they've been money for 6,000 years. That's traditional. But so what happens is I want to make sure that if I need to buy gold and silver, or if I need to buy strawberries or bread or put a tank of gas in my auto, then I can do that. And if people lose confidence in the dollars, you know, you're wheeling around a bunch of money just to buy a loaf of bread. Well, silver holds its value too. And that means that it's universally accepted as money, even if we've forgotten about it for a minute because it's been trained out of us. If you look at those countries that right now are going through the hyperinflation, you know, people remember very quickly that gold and silver has value. And so for me, silver is for barterability. I want to make sure I can always put that tank of gas in, buy that pint of strawberries. And so anything though is anything physical or any talent that you have is also barterable. The difference between, say, like I have an urban farm here because of this. I was not a gardener or a farmer before this, but I believe my research. So I became an urban farmer. And, you know, I have eggs, but maybe you're allergic to eggs, right? So I would have to find somebody that has what I want that's not allergic. It's too long a process. Silver is universal, and I can take that dime anywhere or that quarter or whatever. I can take my silver and convert it into any currency, any good, or any service. But if I want to, part of the strategy is to then, when I see that cup formation happening in other asset classes, when it's somewhere down here at the bottom, convert some of my gold holdings into income producing assets. I need gold for that because it is a way to hold a lot of wealth in a small package. So I might need a house full of silver to conduct the same transaction that I might just need a few ounces of gold. And historically, 25 ounces of gold during these periods of time, 25 ounces of gold could buy an entire city block, buildings, and all. So for wealth, that's where, now there is fractional gold, so I'm kind of being general in here, but for me, it's about functionality. What am I trying to accomplish? Because I have also done studies on the performance of both silver and gold during hyperinflationary events. And while you absolutely want both, frankly, gold outperforms because that's actually how a reset is done. They take the fiat money, and fiat means by decree. So they take the government money that has no intrinsic value, and while confidence is lost, it has no value. And they reset it against gold money that is all intrinsic value. Because again, broadest base of buyer across the entire swatch. And so then what you see, and you know, anybody can Google it, and you can watch my work. I show you guys all the time how it just goes straight up like that in nominal terms. So was it really gold getting that much more expensive? No, it's the currency getting that much less valuable and accepted.
Amazing. Yeah,
it is.
Yeah, and I think you talk about being able to see patterns, which I love, and you do that. I'm a little bit similar. I like to do research. I shared with you a little bit about my work and being on boards and being behind the scenes. Mm-hmm. And I don't think people understand, and you mentioned the BIS before, how like the BIS is the central bank for central banks, and then you've got the central bank stuff. What I like to do is, like you, look at the speeches. I'm perhaps not as au fait with all the language and terms as you are, but what I found really fascinating was last year I was looking at some stuff that the head of the BIS, I think in Germany, spoke. He's also the CEO of the Bundesbank, I think, and his exact speech, the construction guys are going, his exact speech, or very, very similar, was mirrored by Philip Lowe a couple of months later, and I went, wow. So they're like repeater stations with this strategy that they're rolling out. And the other thing that I've been looking into is how they are, in my brain anyway, running a parallel strategy for bringing out this central bank digital currency. So that's kind of, they're in the future already living that, and they're communicating plus stuff that's happened, they've already created now. So we're getting the news that they've decided we're going to get. But what I'm noticing, and I wanted to see if this is happening in the US, is coins, right? We've had our ATMs are being taken out, where we're having ATMs shut down everywhere here.
Right.
Branches are closing. And the coins, they've just started in the last week talking about they might start, removing the 5-cent piece, right? And people are just asleep. They're not joining the dots, right? Because they're, to your point earlier, this web, this construct, these people that design this stuff, the perception management, are absolutely brilliant, right? So
Brilliant.
I'm interested in what you're seeing on the ground there. Are you having coins taken away? Are you having, what are the signals that people are seeing of the transition? Are banks closing?
Yes, banks are closing, branches are closing, and they just did a big thing in the US about all the coins going away, and people, because of the coronavirus, and the money is so dirty. I mean, it spreads coronavirus, get rid of the cash. And, because in this country, we still have 53% of the transactions not big transactions, but day-to-day transactions that are conducted with cash, and that's really a problem. But going global, we talked about the Bank for International Settlements. The other entity is the International Monetary Fund, the IMF. And the members of that are every Treasury Secretary and every central bank chief in 189 countries. So almost everybody. Not quite, but pretty close, because I think there's 196 countries in the world. So they're pretty darn close. And what's been interesting is that they came out in '69 with their own internal fiat currency called the SDR. And it's just a name. It stands for special drawing rights, but it's just a name. It doesn't really mean anything other than it is a basket of currencies. Originally, it was based on a certain amount of gold, but when the US went off the gold standard and then everybody else did, so it's this basket. Now, it was created to take over as the US as the world reserve currency. And what that actually means is if you are a government or an individual or a corporation going outside of your borders, you had no other option but to use US dollars in your transactions, right? If you're buying lumber or oil or steel, and especially, oil. And the petrodollar was created, and that's why the US still retains that. But when the system died in 2008, it was China that said, and I said, I don't know what the new currency is going to be, but they came out and said, well, what about the SDR? And I thought, well, that's perfect, because everybody has some. If you go in and look at your postal service, and if there's a search bar, you put SDRs in there, my bet is you'll find the SDR valuation in there in airlines. So it is a familiar entity, and they dusted off all of their old mechanisms and they tested them, and then they probably improved them as well. So I think what we're going to end up with is a local currency, right? So in the US, the digital dollar. In Australia, the digital Australian dollar. But then we'll have a global currency being the SDR, because they can have every currency in there. It doesn't really matter. But I don't really want them to be in charge, because they're the ones that got us into this mess to begin with.
I gotcha. We're nearly at the end of our time, but I just wanted to throw it. So we've sort of looked a little bit at the past, where we're sitting now, and it's a critical moment. And for anyone, I'll give you a link under this video, and I post it to your session, your live session that you did this morning, because
please. The monetary regime shift is upon us, and this is the globally synchronized economy.
Yeah. The synchronization piece is the bit that it looks like these random events, and it looks like these disparate moments, when actually it's coordinated. And to your point earlier, you start communicating that hey guys, this is a strategy and it's coordinated. You definitely look like the person that's loco, and that's okay. I'm happy to be loco, because it's gotten my family out of positioned very, very nicely, thanks to people like yourself and all your amazing work. I'm going to throw this one in, right? You would probably be across it. We haven't got time maybe to go into it too deeply, but I was doing a bit of digging around. And sometimes when you can just find these random PDFs and things like that, which is just interesting. Mm-hmm. And I was on it was a US website. I think it was to do with Treasury, and it was the Compt Control. It was a notice from the Compt Controller, if I'm saying that right. And it was to do with the quantum global financial system. They wrote, this document was about the quantum financial system that is going to be running parallel, and that it's already here. And it was to do with, it was a document which was, I should get it to you to have a look at. It was basically resettling a debt or a deficit with Mexico. And it made a comment there to say that it's, I've got it in my system, and I highlighted it because it's, the language in it was like, hang on a second, they're saying that this system actually exists and it's running parallel at the moment. So I'd love you to have a look at it, and maybe you could translate it for me. But it also talks to some legislation that goes back to 2018 or something in the US around some technology that they're referring to as quantum technology, which I interpret it as just all the machinations, the science, the technology things that they've got to put in place for the integration of all the systems for when they go live with being able to do digital currency. So I might be being right out there and completely on the wrong thing. I'd love to get it to you and compare notes, and maybe we could have a chat about that.
That would be great. Yeah. I mean, no one person can find everything, and it happens regularly. I'm so lucky because viewers will send me something, and I always look at whatever anybody sends me. And, you know, the more eyes, the merrier. We are a community. Yeah,
I love that about you. It's awesome. So I was saying to you, I'm competing with builders here, but I just want to thank you for all your research, your commitment, your consistency, your energy, the amazing speakers that you bring on, and how you educate the community. So if anyone here wants to connect with you for your strategy, sorry about this noise, where will we send them, Lynette?
Well, we could send them to ITMTRADING.com. It is a little bit challenging for us to ship overseas, obviously, but you can talk to our consultants there. And also, you know, of course, I have the YouTube channel, which is, if you just Google my name, that'll come up, but ITM Trading on YouTube as well. So, and we really are all about sharing and being of service. I actually think that's why we're all here, is to share the gifts that we've been given. And I have been guided in this, and I'm so appreciative. And I really appreciate you having me on, because it is a global community. We have to all come together. We can't just be to ourselves, or we will not be able to affect a change. And while, you know, I know we can't really stop this, if 3% of the population understands what's happening and says no, then what I want really to do is retain our choices.
Yeah, great.
And really, it makes having physical gold and silver, if you want to be really diversified, have something that's tangible, that's outside of the system, that does not run any counterparty risk, because everything else runs counterparty risk.
Yeah. Lynette, thank you so much for today. Have a lovely afternoon as you, whatever you've got planned, and I look forward to doing this again soon. Thanks for your team for setting this up, and it's been fantastic. It really has.
Thank you.
Okay.
Thank you, Tanya. It was fun.
Bye.